Oh, hi everyone. Thank you for joining us for this panel, which is entitled Rethinking Payment Solutions. Payments have been a fundamental means of commerce for as long as mankind has been around, right? And throughout the history of payments, there's been, faster, cheaper, easier. These concepts, these ideas have always led to innovations in payments. Now, this panel explores the payments industry and how crypto can innovate in an industry that's as old as we are. So let's start off just with some introductions. Everyone can introduce themselves, maybe 30 seconds to a minute or something. A little bit about yourself and what you do.
Hello everyone, I'm David from Mystiko Network. I'm an early contributor of Mystiko Network. Just to give you a short intro to Mystiko, we are building a base layer for Web3 privacy. So we provide privacy regardless of whether it's layer 1 or 2 wallets, cross-chain. With a simple integration of our SDK solution, they can have privacy features.
Hello everyone, my name is Estrada. I am the co-founder and CEO of XLD Finance. What XLD is that it's an infrastructure project that actually uses decentralized technologies to provide financial services in the real world without the traditional barriers of finance. So we have payments APIs, cash off-ramp APIs, mass disbursements, and a lot more things. So, thank you.
So, hi everyone. My name is Luke. I'm from a venture capital called Z-1 Capital. As founder of the Z Holding Groups, which is one of the most significant corporate venture capital in Japan. And we have substantial ecosystem companies such as Yahoo Japan, Line, PayPay, and I joined into the crypto space in late 2020, and personally looking into e-commerce and general China tech. Very happy to join the session. Thank you.
And I'm Jor Law, known as JL Law, because Infinity Ventures Crypto also has another Jor Law, which is JT Law, my brother. I'm an advisor for them, a strategic and go-to-market advisor for them. When I'm not advising for IBC, I work with Prime Trust to bring payments and infrastructure primarily to US-based crypto, and also T0, which does security tokens. So let's start a little bit with, what are the key requirements of payments, right? What makes for good payment solutions? Anyone?
Okay, I think based on my experience, so I'm Filipino, and my experiences largely based on Southeast Asia. I think there's a couple of things that's absolutely important. I think the first one would be just the expansiveness of the merchant network. So as many billers as possible inside that ecosystem, and basically multi-format points of presence to actually initiate. So basically I think if you have to think about it, there's the originating side, right, where people actually go and pay, and the terminating side, which is the billers. So I think both of those, on one side, it needs to be as expansive as possible, so that people can actually just go to one place and then pay for all the bills, their bills and whatever they want to pay for. And on the other side, it needs to accommodate different types of users, people who are digital savvy, so maybe mobile apps, some people who have no bank account. So basically a brick and mortar store, and even, for example, co-located within convenience store. So that's what I would say would be the minimum, I think, requirements of a good payment network.
To add to Ian, as to speak of our company, we have the #1 payment service called PayPay in Japan, and we have got like 47 million users in Japan. But to answer the question, I think if I represent our company to answer this question, is we may define the most key factors to build a good payment solutions to build the universality. Like we have to, like all the users have the access to use the payment solutions. When our payment solution PayPay was launched in 2019, many Japanese users would refuse to that kind of savvy and tech solutions to pay, because there's a lot of payment solutions is trustable to Japanese users already, such as the bus car, just cash, and they were like, how should I trust that kind of QR code solutions? And can we use it in Okinawa? And they will see nowadays in Okinawa, you go to take a ride in a taxi. You also can pay with QR code, right? So we pay like 20 billion Japanese to expand our merchandise and to let users to have incentive to use PayPay. And so back to the question, the universality is really important to payment. Yes, I fully agree with Ian.
What, in these days, payments often go across, country lines and things like that. So in some countries, like where I'm from in the US, payments is actually not very advanced, but it's not a pain point for many people. So when I think about payments, a lot of times I think of, well, what's wrong with it, right? But in reality, there are segments of the US where payments doesn't really work very well because they're low income, they don't have access, etc. But when you think about globally, obviously like Japan, US, you have very sophisticated payment systems, a lot of payment solutions, right? One of the promises of crypto is that it could be global. So how do we address, when you both of you talked about universality, right? How do we extend that so that it's really universal to everybody? And I know Ian kind of mentioned that, brick and mortar stores even, which I think is actually important, even though we're moving to Web3 and it's digital, some people just don't have that, right? So how do you address universality with respect to, this global economy?
I think from the perspective of fundamental side of payment solution, it is really important to have a high-speed transaction, especially in regards to crypto payments. So far, the payment speed has been not as quick as traditional payment solutions such as Visa and MasterCard, which provides 32K TPS, but first generation blockchain is only 7 TPS, and Ethereum is 15. So I think as technology develops, it could be solved. For example, Solana has 50K TPS, and Ethereum is aiming for 100K TPS. So for global transactions, I think in fundamental side, it really needs to have a quick transaction speed.
Another question is, we talk about rethinking payment solutions in effectively crypto conference, right? So what is the promise of crypto? Can it really revolutionize payments? And how does it change the way we think about payments? Do we even really need to rethink payments?
Yeah, I'll take an answer to this, and I think so. One of my roles was I was part of the largest wallet in the Philippines called Gcash, and one of the pain points that we solved for our users is that there were people who literally needed to pay for their electricity. They'd have to go do with multimodal, 3 types of public transport, 2 hours one way, just to pay for that bill. And then they have to walk to another place to receive the remittance from their family members working from other countries, right? So I do think that the more developed economies take this for granted. But when in the Philippines, where around 30% of municipalities have no bank presence, right, and there's no financial infrastructure there, I think that crypto, the beauty of it is that from a distribution perspective, anyone with mobile phone and mobile data can have access to the ecosystem. So I think that's super important. We kind of skip a lot of the things. The other thing also, so this is the same in Indonesia, not necessarily in Malaysia, but in most developing markets, KYC. So at one point in time, I was a lender as well. One of my top customer complaints was asking me, "What's a driver's license?" Or "Is this a birth certificate?" Right? So they won't have, if they can't provide those, they can't get a wallet. They can't be involved in that formal financial system, and they're going to be stuck with brick and mortar. The crypto wallets and decentralized technology kind of removes that. Anyone can open up a MetaMask. Obviously, it comes with its own risks, but I do think that's really how crypto can help revolutionize people's lives, right from a payments perspective.
Look, I completely agree with Aaron's idea, especially in regards to overseas remittances. I think at this moment, like traditional players like Western Union is dominating the market. And recently, I think Coinbase is like reaching into that 500 billion industry. So as far as we can transfer that into crypto industry, I think it could revolutionize the industry itself. And also at the same time, the core fundamental side of the crypto payment is C2C. So as soon as that could be realized, we'll have more beneficial sides on it too.
So just a little bit on this. So I think we'll have to divide this question into two parts. The areas that has not sufficient payment infrastructures will definitely get the benefits you mentioned. But the market like Japan, the fintech market is very, very mature. People have get used to the fast card resolutions and other payment solutions. So it's kind of you have to see the both side of the consumer and merchandise, and you will have to see the numbers of how much benefit you can get put the benefits from the solutions to customers, and what's the churning cost for them. So in the market like Japan, I think we have to explore not only the accessibility, but also to see what token can bring to users. I think tokens is not only a currency, but also a kind of certification and another kind of commodity. So we can not only give the users a better way to pay from C2C, but also can enable the merchandise, the stores to reward the users not only with the currency but also with some NFTs or other things to fit. So to summarize my point, so we have to explore more kind of upside of the digital currency payment in such kind of a mature market to persuade them to use.
I think that makes sense. Even in an economy like the U.S., you do certainly have areas where it's entirely digital. For all intents and purposes, they use digital money, right? And then you also, if you start going to other areas, you start seeing a lot of checks cashing places, and the supermarkets will do that as well. And a lot of those people don't have bank accounts, right? So finding a system that's universal for both of them is really important. So we keep talking about the benefits of crypto, why it can help, but obviously the headlines, often paint crypto as something that is harmful, something deceitful, something that's fraudulent, etc. What are some of the risks that crypto bring into the payment space, you think?
David, you want to kick us off?
One of the most popular concerns that people usually have these days is price volatility, obviously. As you saw the Bitcoin price going down so much, people are afraid of making payments by using traditional cryptos, such as Bitcoin or Ethereum. But there are obviously solutions these days by using just stablecoins or with advanced technologies such as converting fiat to crypto and crypto to fiat instantly, within a second or 2 seconds, a couple of seconds. I think it could solve those price volatility problems when it comes to crypto payments.
Well, yeah, I think price volatility, I would say that there are two kinds of risk when it comes to crypto. I think the first one would be kind of personal consumer risks, risks as individuals. And then second would be kind of systemic monetary policy risks and things like that central banks really care about. I think it really stems from moving from this centralized model where it's custodial, right? There is a third party that takes control of your assets on your behalf. But when you're in crypto, specifically in Web3, it's self-custodial, right? So there's no deposit insurance company looking out for your looking at your wallet. There's no one who can actually touch your wallet, not even the wallet company. So you're the last line of defense, right? So I think that's one of the biggest risks, and obviously other risks like price volatility, losing money when in gas fees. I'm sure. I think in my first week of Web3 years ago, I lost like $1,000 for a $50 trade because I was just trying it out. So obviously there's a risk there, and then I think from the regulatory side, in general, in my experience, there are only two things that regulators generally look at. First of all, it's consumer protection, right? Anti-scam, making sure that the team is representing what they're doing properly. And second is anti-money laundering and terrorist financing. So, I mean, a part of being a self-custodian, like independent, right? It's independent. Your liquidity, you can have bad actors who are not KYC, who you do not know who could be like sending funds, right? Or maybe, for example, in our case, we do crypto to fiat, funding terrorism in one part of the Philippines or something like that. So I think those are definitely the risks, and I think it's going to be a challenge. It's going to be a combination of central banks and regulatory authorities kind of adjusting their approach. They cannot be heavy-handed, and the other one would be kind of either it's an association, or basically the entire Web3 community comes up with like a code of conduct that we will say like we comply with this, and it's really self-governance as a community. So I think that's my perspective on risks of crypto.
Yeah, it's when we talk about crypto, we at least among us, we use the word crypto quite loosely, right? We say crypto, and instinctively we know, oh, you mean Bitcoin for this use, and USDC for this use, S&P for this use, or something like that, right? But the general public, crypto is crypto to them, right? So what sort of education do you think has to be there for crypto to really be able to power payment solutions? Or do they not need to know? Do they not need to know it just because like they use Wi-Fi internet without knowing how it works, right? So, or do they need to know the education? Because when we talk about things like, the price stability, right? If you're using payments, if you're truly using crypto for payments, price stability is important, but a lot of people are thinking like, oh, well, it fluctuates so much, but that's probably the wrong type of crypto, right? So what sort of education do you think we need to give to regulators or consumers in order for crypto to really be able to power payments?
Speak of this, I have to mention our group company Line. In Line, we build a very, very high priority entrance for the Line BitMax crypto exchange. So we use that kind of exchange to let users to have more experience on crypto trading, on the crypto usage. And the Line have like 80 million users out in Japan and out of Japan, and we see some very strong numbers on the growth of the BitMax. But still, people don't just trust it. And we are thinking why did that happen? Is that the crypto payment between the normal payment is not such difference. You just pay it, right? You don't feel the benefits of the payment of the crypto. So to let people understand what crypto is and to use crypto more, you have to let them know use crypto is better to use, have the a lot of how to say that the good part of the spending, right? So it's like you use the Starbucks tips. You use the Starbucks the ticket. You go to the store and you will like in Japan the Starbucks store will say thank you to you, and you're intending to send the ticket as a gift to a friend, right? So that's how things to expand. So the goal of Line and the Line BitMax is to let most of people to know how to use the crypto, but we're still trying to find a way to connect the bitmax exchange to users and to merchandise. So it's kind of a long experience. So I think all the other cryptocurrencies have to think about not only the currency side, but also the experience side. It's a long-term thing.
I'd actually like to add to the experience side, or actually throw in a question for David. So I'm actually all for making everything super simple, right? Like, you know, like the typical Y Combinator thing, user experience, blah, blah, blah. However, I'm conflicted in crypto. I feel like you need to have some sort of, so that in the future, you're a better citizen and you lose your money. There needs to be some level of learning. You have to understand the basic precepts, right? You have like the concepts of the blockchain and, you know, all of these things. So I'm conflicted. Like, I would like to abstract everything, right? Spoil them, like make it look like Ready Player One. But I feel like longer term, all the users will be an ecosystem will be healthier and less people will be scammed. If, you know, there's a minimum friction there. So I don't know, David, what you think about that. It would be super interesting.
I think like across the blockchain industry, I think it's a task that all of us needs to work on, especially in regards to education. We need to, if it is possible, it is necessary to pursue like regulators, and also if it is possible, we put more investments in PR side that crypto could be stable, and there is a difference between not stable coin and stable coins. But at the end, I think this issue could be solved as time passes, because younger generations they have like much more understanding in terms of the concepts and crypto usage. But it seems that as those regulators are from, I'd like to say, it's just a generalization, but they have some more difficulties in understanding the concepts in blockchain and the usage of blockchain and wallet usage, etc. So as younger generations take more roles in those systems, I think the things will be changed and people will start to understand better. So I think as time passes, it could be resolved in the long term.
So we talked about this a little bit, and it's actually a topic that's near and dear to my heart. But will payments ever really be decentralized? Or will centralized intermediaries always be necessary?
I think for a while, I mean, it's about like centralized side versus decentralized side. But I think in the long term, it will coexist each other. In order to have more like usage of DeFi or decentralized finance or crypto payments, it's necessary to have real world data to be used in like smart contracts, etc. So like Oracle smart contract, we bring those real world data into smart contracts, and we can make like a better transactions in crypto payments, etc. So those usages like Oracle Smart Network and bringing real world data into our smart contracts and public blockchain network, that will enable more of an adoption of the blockchain payments, I think.
I fully agree with that. The only challenge, though, in reality, is that I don't think there will come a time where every single, for example, payment, or maybe it will take 300, 400 years, that will be ready to feed their data into like smart contracts. Like I'll give an example, right? People make money off of data. I mean, we know it with Facebook, but for example, credit bureaus, FICO, TransUnion, those guys, their business is to keep their data in-house, right? Because now the other competitor, that's their data set. Like they've acquired the user, they've underwritten the loan. So I think it might be a challenge. I do also agree that it will have to coexist. It will have to coexist. I mean, the fiat. Let's be real here. The fiat infrastructure has been here for many years and for centuries. And I think that it will take time for us to go 100% digital. So I would think about things like the CeFi and the DeFi world as like from a meta perspective. Like they're also chains, right? Like or actually off-chain and on-chain. Like I think they will coexist. So that's my perspective. Yeah.
So, I mean, do we agree or do we not agree that maybe kind of the best solution would be some sort of base layer that is as decentralized as possible, which really means you're cutting out governments, right, and authorities. And then on top of that, maybe a collection of centralized intermediaries that might facilitate commerce for people. Because, you know, I think people confuse sometimes the capabilities of the technology with the ideologies of the technology, and then, frankly, how much convenience people want, and whether there's a market, right? In the old days, we would just trade, we would just barter, and one of us decided like, oh well, it's very inconvenient to do it this way. Maybe if someone created a marketplace and we knew we could find who we wanted to trade with, then we'll just go to the market and we'll buy vegetables, etc. Then someone said, well, I don't want to have to trade rice for corn to trade for broccoli, so now I need something centralized. But each time that happens, a lot of times people are saying, well, I'm just going to trust somebody else. So, and there's always people like me where I will lose things. I trust someone I don't trust more than I trust myself, right? So for someone like me, how do I ever move into a fully Web3 payment solution, right? What are your thoughts about that?
So, to speak of that, I'm still a little bit skeptical on the fully decentralization. I know this is not really to Web3 mindset, but still I think the fully decentralization and the fully self-governance really requires users support. They require users to think about all the things, right? But nowadays, the people still, the society don't still have the fully power to produce the commodities like infinitely, right? So people have to work as a part of the society. So people have to have some speciality for something. So at that time, if you require users to examine all the things has happened on chain, the people will like very substantial on like, hey, is that the same? I think what I'm thinking, right? Or is the information that I get is fully open, or am I as a judging all the things in a fully knowledge status? So back to your question, I think the people, the society is not ready for the fully decentralization. But some of the people, they have the ability to learn the new things, to learn to always study, to do the research on all the transactions on chain, right? So I think it's a long-term thing. The things will go by step. So first some smart people, then some early adapters, and some countries or areas on this, and then like 100 years later maybe we will face it like part of decentralization society maybe.
Right. I mean, to some extent, it's tied to control, right? Some governments want to be able to control their country and their citizens and their population. And even if it wasn't governments controlling it, human nature likes to control things, I think, anyway. So you could have a completely decentralized technology and ideology, but there's always someone that's going to come in and try to control some aspect of it, whether for profit or for power. So with that in mind, how has the rise of crypto affected regulations as they impact the payments industry, do you think? Or too early to tell? Or you see a very definite direction of where regulations will go?
So on our side, we work with regulators, and we actually take the time to understand what their approach is. I think there are multiple flavors when it comes to regulation. So just without overcomplicating it, right? There are different licenses and regulatory approaches from payments, for virtual currency exchange, electronic money issuance, which is like mobile wallets, banking licenses, digital banking licenses. So there are different verticals of regulation. The other thing is also the kind of common regulatory framework. There's the US and the EU, and generally they go their own way. But then when you look at Latin America, Southeast Asia, Africa, they usually follow, if you read the circulars of their central banks, it kind of looks 80-90% similar. So there's a common regulatory framework that's kind of accepted for the rest of the world, ex-EU, ex-US. And then there's also the individual approaches of each regulation country. So for example, I'll take Malaysia. Last July, they did like a banning spree of exchanges in Malaysia, right? And they took a very sensitive stance in terms of allowing exchanges, centralized to operate. Vietnam is very the same. We haven't engaged with the regulator there, but we've talked to someone who has who's running one of the largest wallets there. And they really don't want to touch crypto because the government is anti-government there. In the Philippines, where we've acquired our first license, we've presented to them our model, and what they said, the examiner said, we said, we love your business model. I might be speaking ahead, but when you get your license, we would love to see your business grow. So there are different flavors per country and different types of licenses. I would say the primary, it would be impossible for regulators to regulate the entire industry, because you're going to have to follow the liquidity, right? If I go to Uniswap, if I try to regulate that, I'll have to regulate every single protocol there, and there's tokens being minted on a daily basis. It's impossible. So where they will try to regulate you is when your tokens touch the formal financial system, right? When it gets crypto to fiat or fiat to crypto. So I think it's a bit too early to tell. I think it's dependent on the leaning or the conservatism of the regulator, but it definitely can be done. It definitely can be done. I think more often than not, we should think about things that we're operating in a regulatory sandbox. Go ahead and launch a small pilot, see if it grows, and use that as a case study to engage with the regulators. And that has worked. That approach has worked very well for us so far.
Speaking of South Korea, I think South Korea is now been trying to be compliant on international guidelines, such as back in 2020, I think there was a guideline published by Financial Action Task Force, and it's a guideline about virtual assets and virtual asset service providers. And starting in March 2022, regulators in South Korea, effectively immediately from March, it's necessary to report any suspicious transactions that's over like $800 in the USD in Korea. So I think the government, like central government, in case of Korea, they're trying to be compliant with the international guidelines, and that's the current situation in Korea.
So, how do you imagine that global payments will work, given that regulatory approach is kind of different, right? Like you said, some regions 80% uniformity, and then US on its own, EU on its own. But part of the difficulty there is, you mentioned Malaysia as an example. They cracked down recently, but then I remember back in 2018, everyone was like, okay, well, Malaysia's opening up its doors. Let's all go there. You had someone flow in, and in Korea, you had something too, where like people flowed in, and it was banned, and people flowed in and out. So, how do you build something when all these different jurisdictions don't agree? And then, even if they do agree, they might change their mind just because a different president comes in power, a different political party comes in power. And is it just us, or that we think this is challenging, or has this been a challenge that has affected payments forever? We just have been ignorant to it.
I think, in some perspective, I think it's kind of like a power game between people who are into crypto and centralized governments. So, I mean, as people get more engaged in crypto assets, and as more people possess crypto assets such as Ethereum, Bitcoin, etc., the voice of those people will be well regarded by regulators of different governments. And although it's hard to like put those different jurisdictions together, and it's really hard to set like an international uniform guideline that have jurisdiction all over the world, but I think it's the efforts of those who are using crypto and those who possess crypto assets that could change the minds of regulators in the future. And I think in these days there are some efforts from international perspective on guidelines regarding trading cryptos, although there are some inherent conflicts with dealing with it. So it's a difficult issue, but it needs to be solved by voicing out our voices more in the future.
Let me share a very interesting fact in Japan. Like in 2019, it was May. The FSA pronounced that the amendation of the security, I'm sorry, it's the law of the financial statement, and it gives so many restrictions on the crypto asset. So at that time, many crypto exchanges go out of Japan, and the crypto founders, they start their journey to Singapore and Dubai and East Europe. And at this year, just 2 months ago, the administrator, the Kishida, he presented in Congress that we have to build the next generation of the capitalism. And what he said is, and right now we have to build a better environment for Japanese founders, the foreign founders, to come back to Japan to launch their token startup, and they may have a positive attitude on the DAO. And what I'm trying to say is, the policies always change, right? To founders, you have to, do the risk management. What I think about the Japanese founders is like, I think they kind of, always follow the trends, like where the global founders are going, they're going. But they don't really think about like if they go to Singapore, fully take their business over there. When someday the Singapore government says no, what will happen to them? So they have to examine like what kind of which government have the how to say that the good support on the law and have the open mind to talk with these kind of innovative technologies. And I think Japan has delayed on the first round. There are so many startups coming out from the East Europe and somewhere else. But I think right now Japan is a really interesting place because I think to the regulation part, the FSA of Japan, they are the most smartest organization in Japan. They think so many things, they think about so many things about the consumer protections and so many policies to prevent that kind of accidents always happens out of Japan area. So from now on, founders have to find these kind of have the base good settlement of the policies in place to build their long-term business, and also have some branch to launch their new or very fierce technology startups in at a place such as Dubai, or there's no regulation part, right? So it's really kind of risk management, I think.
All right, David, I'm going to need your help on this next section because I think talking about privacy is extremely important in terms of payment, especially when you start introducing concepts like crypto and the things that really even set the government's fear most, right? Which is AML, KYC, and things like that. What are some of the problems relating to privacy that crypto introduces to payments? And how can zero knowledge connectivity address that? And maybe if you want to, have a longer time to address that, that's helpful.
So if you look at the cross-blockchain industry right now, it is mostly dominated by public chains, which means all the data, transactions, etc., are open to public, and they can track and correlate the identity of users and transactions, etc. So real-world adoption of public chains could be really difficult for some of those major players like companies, and even for individuals, because their data regarding their financial transactions and payroll, etc., could be exposed to the public. So it is essential that we add some of those privacy features on public blockchain. And at the same time, there is a conflict because anonymity could be troublesome because it could trigger some of those issues related to AML and also KYC. But we try to resolve that conflict because we are trying to add some of those sanction lists in the smart contracts, and also we can also add functions such as hiding only to address, not from address. So it is possible to be somewhat compliant and mostly compliant with AML and KYC issues, and also CFD issues by adding privacy features. And by looking at the other side, I think regulators are kind of in conflict with the privacy. If you look at, let's take an example of GDPR of the EU, European Union, right? It stands for General Data Protection Regulation for EU. If you look at the article 16 and 17, there are clauses or articles talking about right to rectify, right to erase the data, and data minimization. If you think about a fundamental structure of the public blockchain networks, it's hard to be compatible with those, right? So I think privacy on those public blockchain network could somewhat, by looking at the structure of the blockchain, could resolve those inherent incompatibility issues. And also, those definitions should be compromised together with the blockchain industry, I think. So if you look at GDPR, there are terms such as data processor or data controller, and if you look at the public blockchain, you cannot define such data processor or data controller, because there are nodes everywhere, various nodes, that you cannot just pinpoint one node as a data processor. So those inherent incompatibilities should be somewhat needs to be resolved by modifying some of this regulation or redefining the regulation. Although it could be difficult, but by putting hands together, I think as people adopt more crypto payments and possess more crypto assets, I think it could be changed by adding some of those more clauses regarding the definitions.
Does anyone think that money should be completely private? 100%? That's a right that people should have? And then also maybe for the panel, because I think this actually matters where you come from. What jurisdictions you're thinking about when you say that.
Okay, so I do think that, I'm also a bit conflicted about this, right? I do think that you need to be I believe in self-sovereignty. If it's your money, it's your money, right? You control it, no one else has to have a say on it. But if you are a public figure, or you're running a $1 billion ecosystem, there also needs to be have some level of transparency and accountability, right? Because, so for me, I guess if it's my own money, I think I would say I'll keep it private. But if I am in charge, or a core contributor, or a multi-stakeholder of any big, any big partner, I think even my own personal assets, I think that needs to be transparent so that I can show that I'm a good citizen, Web3 citizen, and my integrity cannot be challenged. That's my perspective on that.
Yeah, I think it is necessary to have some functions that could switch between, like, it could be public and in some perspective private. By having those two like functions coexisting each other, being public and private, I think it could be more regulatory compliant and also be regarded as more acceptable from regulators too.
But I do think, just for me, I think the money have to work, have to get the connectivity of the whole society, right? If your money is totally private, and it's not controlled by the central system, like it's just only paper or a number, right? It's not distributed. So although the money would have that kind of attitude that want to be owned by a specific person, but also have to be work in a society. So I'm kind of, think the money don't have to be really the whole private thing, but also but just in the whole society.
Yeah, let's carry on a little bit more, because for many of us that are working with fiat, we have our legal identifications linked to that, and that gives us some sense of convenience, some sense of ease, some lack of privacy, but not necessarily that much lack of privacy, right? We trust our intermediaries to adhere to certain types of privacy regulations. From a crypto perspective, what's the challenge of, especially the way wallets work, what's the challenge of linking and ensuring that a particular wallet is a particular person, right? So even if you verify me today, what are you really verifying? Is that wallet really mine? Is it not mine? And how do you ascertain that it's mine now? And I suspect, if you think about it, we have the same issues in the regulated world, right? Where if you go in and you set up an account, you have an account number, but how does someone know that account number is yours? It's easier, I think, in the real world, because if you set up an account with one particular bank, you trust that bank to verify that one particular account. Whereas in the crypto world, you can set up your account anonymously, and then you link it, you prove to some one person who that is, but after that, you could lose that account. Just like in the real world, you could lose your account too. Someone could hack it, you could have given your username and password to somebody else, and they could use it. But there's a little bit more protection just because the holes are a little bit less. So how does that affect usability of payments where identity is important? For example, political contributions, or anything that requires AML, KYC, security style work. And is there a way to help address that using zero-knowledge proof technology?
Yes, in somewhat ways. So zero-knowledge proof technology you can think about it as like giving a private key. So without outside information, if you have that key, you can be verified that you are the actual user of that data, or you can be verified with that private key. So in some sense, I think it's possible to have that function that, as you mentioned, but I think it depends on the case. There are various cases for AML and KYC, and with the private key and etc., it's possible, but it depends on the demands of the regulators and also the users too.
How do you think we reconcile that? Because when you think about identity, in my eyes at least, there's two forms of identity, right? Brian introduced Ian to me and says, hey, this is my friend Ian. Ian's wearing a name tag that says Ian. He says, hi, I'm Ian. Right? So from a social perspective, I now know him as Ian. Right? That works for most things. But when it comes to regulated activities, that's not good enough, right? When it comes to regulated activities, now Ian has to have some sort of official identity, which now means that some official has to grant that, right? Which now means usually some sort of government authority with police powers. Usually the police powers are important because they have to be able to enforce it, right? So if you've got that going on, and then the promise of Web3 and privacy, zero knowledge proof, everything is more of a self-sovereign identity, but yet identity can really only be used in a regulated fashion in certain cases through not self-sovereign effectively, right? How do you reconcile the two of those? Or is it possible?
Yes, that's a really tough question, but I think we have to look from like two different perspectives. One is, I think it could coexist like each other, because in the real world applications, I mean, you need to have some kind of identity that is proven and like certified by centralized government, and that's essential right now because we are living in the world that belongs to a certain citizenship, right? If there's no such like a country defined right now, then we can also move on to the second concept, which is totally decentralized identity of Web3. But as far as we are under a certain jurisdiction, or a certain country, or a certain region that requires somewhat way of identity from those centralized identities, in that real-world usage, I think centralized centralized entities should play like a bigger role in identification. But when it comes to more of a like transactions, like monetary transactions that could facilitate more of the overseas payments, etc., I think those are the fields that could be useful in using zero knowledge proof and also private transactions, etc.
Yeah, maybe you won't go into this one, but I'll leave a thought, which is zero knowledge proof is amazing. I think it's one of the features of Web3 that will really drive it forward. On the other hand, I'm always skeptical with human nature, right? I can zero knowledge proof this and this and this, but the second I sign up for something like Facebook, I now have to depend, and they have access. I have zero knowledge proof. I said, okay, I'm gonna give you this information. I have to now trust the regulators to enforce against Facebook, and Facebook to now keep that privacy. Otherwise, some second layer on top of this has defeated that simply because because I wanted convenience or I wanted their free service. But really quickly, just curious, because how you think about this, and this is not a suggestion for anybody to do money laundering or anything like that. But in terms of privacy, is it actually safer now for somebody to send money through a bunch of different centralized intermediaries in different jurisdictions, and then also a bunch of decentralized crypto things? Is that actually safer? Because as unsafe as it seems to go to centralized, they have the protections of different jurisdictions. So if somebody has to go to like 20 different jurisdictions to subpoena, as opposed to just going on the blockchain explorer, is that actually more private?
This is a very hard question. Okay, so is it much safer? I think, all right, so I hope there are no regulators here, law enforcement, but one of the things, if you're in like Southeast Asia, like for example, Binance has some markets where they have direct bank and then mobile wallet and credit card, off-ramps. In some markets, they have C2C. Right, so if you're in a C2C market, one of the ways that you can actually hide your money, your funds, is to send it to a Binance account, right? So if you want to buy a car, or you want to pay a team, or it's your salary, send it to Binance, because the block explorer of BSC scan will just say, Binance 14, that's a transaction. So you can't prove anything, right? So if your question is about from a regulatory perspective, is it safer? I think there are pros and cons, because if you're purely in Web3, as long as you don't, your wallet isn't linked to an Ethereum name service like, Ian.eth, right? That it can be linked to me, which is what the IRS is doing, right? So that's the reason why a lot of crypto influencers in the US never dox themselves, because they have IRS just looking at Twitter all the time. There are trade-offs on what you want to do. Centralized, basically, if they're in the C2C market, they have no relationship with the regulator. So they're not going to be able to get your data there. So I think just different strokes for different folks, I guess. Weird answer for a regulatory question, but I think that's
I was just curious.
how we should approach it.
I was curious, right? Because privacy. So we're coming down on time, so I'm gonna, kind of just go down and let you guys choose which one of these you want to answer. And one is, obviously, crypto has seen a massive slowdown. It's kind of clear. This actually affects different aspects of crypto differently, right? So, some parts of crypto are devastated while other parts are just flourishing, amazingly. How do you see the impact of this current slowdown on payments and the progress of rethinking payments and payment solutions? So that's one question. Or you can answer, what takeaways would you want someone in the audience to know? And maybe let's go down the line, and if we finish early, people can get lunch early.
I think this slowdown or price breakdown happened repeatedly in the past, and therefore I don't think we need to be concerned too much about it. It's more about right now it's more about Bitcoin dominance and 4-year cycle and etc. But as market gets more matured and more stabilized, this breakdown will not happen in more frequent basis. So I think it's a good time to build. It's always good to build in a bear market, and we can all flourish together in the upcoming 2 or 3 years. That's about it.
I think my answer for this for the bear market is, I mean, if you've been able to raise funds, make sure you control your burn rate, make sure you have enough, right? Try to get as close to 2024 as you can. That's certainly what we've done on our side. The second one is, I would say that this is now the time to actually start building if you're doing anything in payments in Web3. Just because since the volume isn't there, the spotlight isn't there anymore. So the conversations are much easier because if you're crypto, no one's in crypto right now, it's a bear market. I mean, sorry, it crashed, so no one's in crypto. So okay, sure, we can write a partnership. It's closer to, it's easier to close deals. So I think it's the right time to really double down on building, just as David has mentioned.
Yeah. So just to add to this, and I also think you will see the relevance between the market between the token price and the Ether's wallet numbers. So if we do payment services in this bear market, it will be very hard to let the payment startups to acquire the new users, right? So it's good timing to find out what is the product edge, what is the benefits of your product, but it's not right timing for do a big marketing campaign, right? So, and yeah, and I also agree with it's a good time to build your own service at this time. Electric Capital has published a report of the Web3 builder every year, and you'll see although the marketing is go up and down, but the builders of the Web3 is keep growing. And last year, I think it's reached to 30K people, 30K core engineers on the market. So good time to acquire more people out of Web3 space into Web3, and let them to build the benefit of the products, which is good choice.
Yeah, and for me, what I would say is that differentiate between speculation and true product building. And stablecoins and stablecoin usage is one of the big potential of crypto. Short of CBDCs coming in, kind of ruining a few things for some of the base layers. I think it's really interesting to understand that this, for me at least, I think that this downturn is different from the previous downturns. I think the previous downturns, you had a very Bitcoin dominant economy and ecosystem without that much being built. And on top of that, you didn't really have that many financial institutions in it. And on top of that, you didn't have this cache of dry powder money sitting in the ecosystem waiting less. So there wasn't really any driving force to really pull it out, and you have to have the Bitcoin ecosystem effectively, or the budding crypto ecosystem pull itself out. This time I think it's very different, right? This time, for example, a lot of companies raised a lot of money recently, sometimes at ridiculous valuations, but they have a lot of money, and then immediately after that, crypto winter happened, crypto slowdown happened. So they're actually sitting on a lot of cash. So if they manage to burn properly, if they focus on what's important, which is building a product, not doing the marketing in the time when marketing is not good, they actually have quite a long runway. On top of that, you also have a lot of money that was raised for new funds in the last 6 months to a year, but really in the last 6 months. We're talking billions and billions and billions of dollars. And these fund managers just don't really want to return the money to their LPs. So they're likely to start investing. Maybe they wait out a year, maybe, right? But they've got so much money that they really have to invest. And so all these companies that are building actual product and going to have probably some good product in another year or 6 months to 18 months, 24 months, they're actually going to get funded, I think, because all these institutions came in. So right now you're being driven by, you're going to get pulled out of the hole because there's financial institutions, you're going to get pulled out of the hole because there's money sitting on the sidelines, you're going to get pulled out of the hole because there's actually utility, there's actually usage for this. So I think that this will be actually a very good time to get into the space, support the space, and expand the space too. And with that, time is over. Thank you, David, Ian, Lucheng, for the panel. Thank you, everyone.
Thank you.
And thank you, everyone. Thank you, everyone.
Do we have any announcements or anything that I need to make, or just, no, we're good? All right, I think this is lunchtime.
Mystiko is building hard, so if you're interested in integration, please don't hesitate to contact me.
Oh, you don't